Right, good morning then, folks, on Thursday the 22nd of June for today's pre-European rundown. We'll look into the headlines, we'll flick across the grid, and then we will jump over to some charts now in a minute. But Jerome Powell yesterday, and obviously today then as well, but he reaffirmed his hawkish stance that the central bank are going to hike interest rates by 25 and 25, so 50 basis points going forward. Markets currently only are pricing in 72% chance of a 25 basis points hike at their next meeting. So, for now, markets still aren't really buying it. Well, they said it last week and they said it this week, but stocks have eased over the course of this week, and they continue into today's European session. We can see over here, dollar slips as Powell testimony offers little surprise. Dollar is higher this morning. Stocks are lower this morning. Slightly subdued trading in Asian trading as China and Hong Kong are both shut. We're both shut for trade today, but apart from that, markets trying to digest. Jerome Powell yesterday, which proved very little surprises. They stuck to the script of last week, which last week was slightly hawkish, but it's where you got to be careful with some of the headlines sometimes. You can see dollar weakens as Powell's testimony offers little surprise, which it did offer a little surprise because he stuck to the hawkish stance from last week that markets did not believe. So, whether markets believe it or not is really another question, but that is where we are at. The central bank are going to hike interest rates further, or saying they're going to hike interest rates further than what markets are currently pricing in. So, something we've definitely got to look out for once we jump over to or head into today's trade and into his next round of talks later on this afternoon. But apart from that, we've not really got a great deal to go off. Apart from that, all these, Australia, New Zealand dollars nudge higher after Powell offers nothing new on rates, which isn't really that true once you jump over to the charts. That's why you got to be slightly careful with these news releases. That's 4 hours ago, about an hour ago, but you do need to jump over to your grid and make sure that is actually what is happening in markets. And you can see across here, the Australian dollar is weaker across the board, Kiwi dollar is weaker across the board, so that's not really enjoying itself, as you can see. Canadian dollar slightly higher, probably off the back of that positive housing figures, positive retail sales figures yesterday we were speaking about on yesterday's pre-US rundown. But if you look at stock indexes across the board, it's just more of the same since yesterday. You can see US equity futures lower, European equity futures lower, Asia Pacific equity futures lower, and they're actually lower by a solid amount on the Europeans. You can see 0.74%, 0.93%, which is the FTSE, which is to be expected, which we've spoken about over the last couple of days. You see the Euro stocks, the Stock 600, the CAC 40, the IBEX, all these are down over 0.7%. So not tiny. Not a complete massacre, but it's pretty strong downside before European cash open. So that is definitely something of note as we head in to today's European session. A bit of safe haven flows into the Swiss franc. Japanese yen, higher against everything against the Swiss franc, bounced around against the Canadian dollar. So that's kind of where we are at today. Interest rates are high. You can see bond yields higher, T-notes down, bonds are down, yields higher. You can see bonds across the board in terms of bonds across the board in terms of global bonds. They're a little bit mixed, so I can't really take too much direction off of that. But equity futures lower across the board. Your Aussie Kiwi lower across the board. Your Japanese yen, your Swiss franc, positivity surrounding them this morning. So a bit of clear risk off trading, a bit of move away from risk and into safety off the back of that Jerome Powell speech. So in terms of markets not believing it, that would suggest to me they do at least somewhat believe it. But then into today's calendar, we've got the Bank of England today, 25 basis point hike we are expecting. Some market participants think we're going to get up towards 6% interest rates. Does that happen? I don't know. They're also saying that 6% is the line in the sand which drives the UK into a recession. So they're in a difficult situation, the Bank of England. Do they hike interest rates aggressively to try cool down inflation, and then increase, say, mortgage rates, for example, a lot further, a lot higher, or do they stop interest rate hikes? Hope that their predictions are how that their predictions are good or come good in the second half of this year, and inflation does fall off a cliff, but has shown no signs of that happening now. Inflation continues to rise. You can see the CPI print 0.3% above consensus. You can see the core CPI print 0.3% above consensus. That core CPI print, as you can see, 5.8, 6.2, 6.8, 7.1. That's in an uptrend at the moment, which is outrageous, but that is the situation that we are currently in. You can see inflation month over month figure 1.2 previous month, 0.7 this month. That's like 2% over the course of the month. Same thing with the core CPI, or 2% over the course of 2 months. Sorry, same thing with core CPI, the month over month figure. So they're in a pretty difficult situation. 12 p.m. today, midday, 25 basis points. I think there is a slight chance for a potential 50 basis point hike, just judging off that inflation data yesterday. But we'll cover that a little bit later on in another video. So we'll get back to that in due course. See it on our social media channels in a couple of hours. But apart from that, we do have some consumer confidence figures out of the Eurozone, as at the same time as Jerome Powell's testimony. So does it really take center stage, that consumer confidence figure? I'd hazard a guess probably not. But some jobless claims, labour market figures. Jerome Powell mentioned yesterday the labour market does remain tight, and there's labour shortages. So there's there's more jobs than there is people willing to work, or people in work. So it's a situation where they need people into work. So does the jobless claims figures matter too much? I don't know. Still 260k, slightly high number, but I'm not sure it has too much impact on markets over the course of today, if I am being honest. But you can see the reaction to Jerome Powell yesterday. Downside across the board, across the S&P, the Dow Jones, the Nasdaq, Russell grinding lower. You can see the DAX, the FTSE, the Nikkei, all grinding lower. The DAX and the FTSE are selling off quite aggressively. Fresh hawkish comments from the ECB that they are not showing any signs of pausing, that they do think ongoing rate increases will be appropriate, which is negative for the DAX. Couple that with the fact that the Eurozone has entered a shallow recession, it's a recipe for the DAX lower. Look at the FTSE, obviously what we've been talking about the last couple of days, inflation continuing to rise. The central bank going to have to be hawkish, right? Going to have to be hawkish to the point where they risk hiking the economy into a recession. Both of them are negative for the FTSE. Hiking interest rates is negative, recession is negative. It's just bad all around for the FTSE, and it's made for some good shorts over the last couple of days. Apart from that, that's kind of where we are at. Negativity in markets. Again, you can see the US dollar. The US dollar is a little bit mixed. I mean, you can see a bit of dollar weakness kind of across some of these different currencies. I mean, you can see a bit of dollar strength to begin the week across the Aussie, Kiwi, dollar Swiss, dollar yen, dollar CAD even had a bit of upside. Euro dollar grinding lower, but again, it was a bit of a flag, and it has popped higher off the back of Jerome Powell's speech yesterday. So it'll be interesting to see what this euro dollar is. You can see that slight uptrend continues. I think this level across here will be interesting at 109.70. Does that hold? Do we get a bit of a bounce off that and continue on higher? Obviously that remains to be seen over the course of today's session. But sterling in focus over the course of today. We can see obviously a bit of negativity around cable at the moment. It did not manage to sustain the gains that the other currencies did yesterday against the US dollar. That's obviously likely to do, or not likely to do, that is to do with the troubles that the Bank of England are in at the moment. But we'll cover that in a little bit later on of the video, so we'll get back to that in a bit. But for now, certainly sterling in focus. I can't imagine it going anywhere other than south over the course of today.